Banks are the backbone of the modern economy. They are the primary financial instrument for the government to implement its monetary policies. Banks are used to control the money supply in the economy. The main income source for banks is the difference between the interest payment the customers pay on loans and the interest rate banks give on our deposits. So essentially, banks will charge more if you take money from them, and pay you less when you give money to them. Interesting. This FYI is not the only thing banks can do, which some might call suspect. Did you know that central banks of nations can also generate money? That is correct, since the value of money for most economies is not linked to any commodity like gold anymore. Banks can print currency as per their need. Talk about creating wealth from nothing. In this video today, we will look at 5 things banks do not want you to know. If you are liking the content, make sure to smash that like button. Also comment below on more topics you would like me to make videos on. Without further ado, let's begin. Number 1. Depositing money in the bank is a scam. Yes, you heard it right, putting money in the bank is a scam. Let me explain why. In almost all major economies in the world, the interest rate paid to customers is low. For example, in the US it is between 2 to 3%. In India, it is around 5%. Now, how is that a scam, you may ask? So think about it. The reason you put your money in the bank apart from safety is to see the growth of money. When inflation rises faster than the bank interest rate, it essentially means you lose money in the bank. You are simply in a better position if you spend the money or invest it in an instrument that gives a higher return than the inflation rate. Number 2. Banks can create money from thin air. We discussed earlier how central banks can essentially create money from thin air, as there is no linkage between most major currencies of the world and a tangible commodity like gold. Well, it turns out that not only is this true for central banks, but it is also true for pretty much any bank. Here's how. The banking system works in such a way that every bank in the world is allowed to create money to a certain degree based on how much money people have deposited in that bank. The bank lends your money to another person when you deposit it. It may offer a 20% interest to that person. This is dozens of times more than the 0.5% you'll be given as the rate of interest. This is known as fractional reserve banking. Banks are allowed to keep just 10% of the deposit and lend the rest. Number 3. You can become rich from bank loans. Enough with the banks winning the game, right? There is a way where you can win, and you'll not be using your own money either. In this scenario, it's the way round of depositing your money in the bank. Let's say the inflation rate is 2.5% every year. If you borrow money with interest less than the inflation rate, that is considered as free money. If you do this, the bank will be the loser since the interest rate is below the inflation rate. Number 4. The rich have it easier with the bank. If you were under the impression that banks exist to help the common man, you, my friend, were mistaken. Banks are businesses that exist to make money. Helping someone is not at the top of the priority list. High profits are. It may, therefore, come as no surprise that rich people can have access to bank loans at a cheaper rate and in an accelerated time frame. The logic behind that is simple. If the rich guy fails to pay off the debt, the bank can take a part of his business or seize his assets. If you're broke, you don't have any assets, so banks have no incentive to loan you money. Number 5. Credit cards are banks' secret weapons. Ever noticed how banks will do everything in their power to not give you a loan, unless it's a student loan, the biggest scam on earth, but have no qualms dishing out credit cards like candy? Banks understand that the odds of using credit to build assets are very low. Most people swipe their cards on liability, creating stuff like consumables, clothes, food, and parties. Banks increase your credit limit depending on the frequency of the use. This is done to addict you to cheap money. But is it cheap? The answer is of course not. Banks charge interest on the principal amount, and that is a major source of revenue for them. No wonder they promote credit cards so heavily. With that, we come to the end of the video. Subscribe to the channel for similar amazing content. Take care of yourselves and your families. God bless us all. Thank you.